Hey guys, welcome back to the Independent Investor Channel. So good to be with you. Coming to you from the Big Apple, New York City, New York. We're going to talk about his and her portfolio on this video, guys, okay? And there's kind of some fundamental reasons as to why I'm getting into some of this stuff. I really think it lends a lot of credibility to somebody that's trying to be a financial coach for people, to have some sort of experience in the market, okay? I mean, if you were looking to follow somebody's advice, you'd like to see that they kind of practice what they're preaching, right? And on this particular channel, we talk a lot about the independent investor, the self-managed investor, the investor that is willing to identify the alternative to traditional investing with financial planners, giving away a lot of your money in fees, hidden fees, transaction fees, things of that nature, and looking into the potential of investing on their own, guys. All right, but that requires, you know, some level of acknowledgement to what you do and what you don't know, okay? And this channel is all about investing stocks. We're going to get into selling your house and real estate and things like that. And we talk a lot about, you know, military retirement as well on this particular channel, but mainly stocks. And you know, guys, if you're going to take financial advice from somebody, they really need to have both experience and they also need to be walking the walk, all right? So I found it extremely prudent to probably just go ahead and do this right now, and go ahead and show you my investment portfolio. And that's exactly what I'm going to do. I'm going to actually show you what stocks I invest in and what stocks I have invested for my wife and what stocks I have invested in our joint brokerage account, okay? So at the end of this video, you can kind of get an idea that, you know, when I say that I've been doing this for 2.5 decades, I'm not kidding, okay? This is stuff that I walk, sleep, and breathe this stuff insofar as just being aware, you know, of being a self-managed investor, and putting my hard-earned dollars into places that I feel comfortable with, you know, so I can focus on other aspects of my life, guys. I don't live, breathe, and eat stocks insofar as it consumes my life, okay? All right, I'm not up until 4 a.m. making YouTube videos, okay? I make them at my convenience, and I'm not making it for money either, okay? A lot of people will get on and they'll do their introduction and tell you that they're doing it for money. I am not. I'm actually doing it for you guys, all right? Because I do this stuff for me, okay? And I've seen the benefits of it pay off year after year after year, and seen the benefits of having the accounts or the portfolios that I build being able to withstand a downturn, okay? You know, everybody online right now is talking about how easy it is to make money in the market, okay? And a lot of them haven't been investing for over 10 years, okay? We have been in a bull market for the last 8 of those 10 years. So really, how hard has it been, all right? I'm going to tell you that I told you, okay? I heed my warning. What goes up must come down, okay? The stocks that do end up going up, they do end up coming down eventually, guys, okay? There's no stock that just goes up forever, all right? So you can just kind of drop that. So I thought it would lend some credibility to the Independent Investor channel to just kind of show, you know, my walk the walk and how I approach investing and how I've approached it for the last two and a half decades, okay? So please enjoy. This is his and her portfolio. I'm going to start with mine, and I'm just going to roll the picks out there to you guys, all right? Identified in green, these are all my stock picks, all right? We've got Apple Computer, we've got Citigroup, we've got Disney, Johnson & Johnson, Mondelez. I went ahead and took a position in Marathon Oil. This is a trade, actually, that I've taken many, many times over the last couple years with the downturn in oil. And I'm well in excess of $10,000 actually channeling Marathon Oil. I'm involved in a stock trade right now in Marathon based on its acquisition of some Permian assets, and how involved it's been in reducing its debt, selling off some of its worthless assets, and getting more into the fracking side of oil production, okay? So Marathon, as far as my oil name, UTX, and then the only limited partnership that I own is actually in the Blackstone Group, all right, an alternative asset management company. They pay a really healthy dividend. I think it's around 6.5%. It does fluctuate from 7 down to like 5. But I really like this as a cornerstone in my portfolio to just rake in the dividends every quarter. I love it. You know, it's a good deal. And then we finish off my account down here when I talk about that fundamental piece to diversification. You know, I watched a YouTube video just last week, and Mark Cuban was talking about how stupid people are for passive investing. It boggled my mind. I had to comment and say, wow, Mark, it's really convenient for you to be in that position that you're in with billions of dollars. You don't need to invest, all right? But the people I'm looking to relate to are hardworking people, just like me and you, that have to look at the statistics, they have to look at historical performance, and they have to look at, you know, what could potentially be in the future. You know, you have to look at, you know, what compounding interest does. And if you want to participate in the power of compounding or you don't, well, that's your personal choice. And I respect Mark's opinion to a certain extent. I just feel like it's easy for him to offer that, all right? So you can kind of see some of the trends here, right? You've already seen my video on sector breakdown and the assistance of understanding sectors to help and aid you in diversifying across those spectrums, right? Or across those different sectors, all right? But the bulk of my holdings are held down here in these two index funds, and I prefer Vanguard. You can go with anybody. I just find Vanguard to be some of the lowest fee and the best producing index and ETF funds on the market. You can kind of see between these two portfolios right now, actually, I've actually safeguarded some money by exiting some ETF positions. I exit those positions free of charge. There is no charge to me to do that based on the benefits of the account. And guys, these are all benefits that you can have as well if you end up, you know, self-managing and getting up to certain steps and levels in those accounts. All right, you don't have to do Robinhood. All right, you can just start a legitimate brokerage account that has a self-managed function to it. And you'll end up meeting your goals, guys, just like everybody. You just have to start, okay? So just to re-emphasize in my particular account, just to kind of emphasize, you know, I don't have Apple, Amazon, Microsoft, Facebook, IBM, Cisco, Oracle. I don't have all those in my account, okay? You can kind of see here, I've only got one technology stock in my portfolio, right? And I try to break up my portfolio based on a two-tier approach, and that's the percentage of allocation within each account, and each percentage of allocation should have some representation from each particular sector. And what I mean by that is, you know, 20% of this particular side of the house should be made up of 20%, or if you take these two accounts and compare them together, the overall portfolio picture should also be 20% allocation for, let's say, technology, okay? So as we kind of work down here, you can see I've got a financial services in Citigroup. I've got Disney as the consumer discretionary piece, Johnson & Johnson on the healthcare, and so on and so on. So that's kind of how I approach, you know, allocating those funds, guys, okay? So not bad. You can kind of see, you know, my portfolio. This is what I've got. This is my actual holdings right now. So if any of you guys have, you know, any commentary that you want to offer down below in the video section, I'd love to hear this. I'm really starting to enjoy some of the commentary that's showing up in the bottom of my video. I don't like criticism with no backing. I do like constructive criticism, however, or other, you know, if you disagree with a Marathon Oil and you prefer an ExxonMobil or a Royal Dutch Shell, certainly leave those comments, all right? But just, you know, be mindful of the comments that you make and make sure that we're working toward being constructive in making the entire investing community a better investing community, okay? So over here, we've got my wife's portfolio. I build this a little bit different. She has a little lesser of a risk tolerance than I do. I tend to be a little bit more aggressive with my stock picks. Right now, actually, I'm set up in a very defensive position. I feel like the market is at an all-time high. I do not believe it's sustainable in the short term. I do believe we're probably in for some level of correction. So if you guys are getting all excited about all the other advice that you're getting online about entering into a bunch of positions right now, come see me when the first downturn comes and you've lost half of your money, okay? And you're in taxable situations, okay? So I'm in a pretty defensive position, but one thing you can kind of see here by this representation of these two portfolios is I'm an investor, okay? I am an investor. I don't just talk about this stuff, all right? I just don't give you advice from a perspective of someone who does not invest, all right? That's like me trying to go out and coach a football team and I know nothing about football, all right? Not only do I have the experience, but I back up my talk with what I actually have, okay? I'm a real investor, all right? And I'm a real human being as well, all right? So when we start to look over here at my wife's portfolio, it's built a little bit different, but I try to build these accounts so they do complement each other. And the very first pick is a good representation of that. CVX, the ticker symbol for Chevron, a huge oil company. It's up there with ExxonMobil, honestly. If you invested in ExxonMobil, you could probably hold it the rest of your life. It's the same thing with Chevron. It's going to pay you a fat dividend. ExxonMobil's around 3%. Chevron is closer to 4% or 4.5%. On the dividend. But do you kind of see how I go for the safe play in my wife's account with her risk tolerance being less than mine, and I go with more of an aggressive Marathon oil, which the ratings are good, they're going in the right way, but it's a lot more aggressive of a stock hold. But these two pitted against each other gives me my 9% allocation to the energy sector, but I do so in a calculated and a smart manner, and these two stocks complement each other. All right, so you come over here and you've got here Microsoft, and you know, Microsoft and Apple are two really safe technology companies, but again, with the current market condition the way that it is, you know, one thing you can see here is I don't have the FANG stocks in my portfolio. Honestly, I would love to own them here, but I'm not going to sacrifice owning the FANG stocks, the high growth stuff, with the market in this current condition, the Amazon, the Facebook, the Netflix. You know, Google I don't necessarily consider just a growth name anymore. It's a growth and income company. And I love all four of the companies, I really do, and I've owned them periodically as trades. But as you can see right here, this is just a snapshot of my particular portfolio right now. And I could add that name tomorrow if I see fit. But this is just, you know, my current allocation. And then as we work down here, we've got some other giants, Pepsi, Pfizer. We've got Procter & Gamble here. I actually saw a video just last week of one of the individuals saying how bad Procter & Gamble is. I don't know, guys. Look, telling the future is not something that I tend to try to do on this. I'm not going to tell you that you're going to buy Procter & Gamble and you're going to become rich on it. That's not what I do. I'm not a forecaster, nor do I even believe in that capability when you're talking about stocks. If you believe that a stock is going to go up, it's probably going to go down, all right? And if you believe it's going to go down, it'll probably go up, okay? And that's speaking from decades of experience in the market, guys, okay? You cannot game this deal. You can't just say with certainty that this is a bad or good stock. I say it's a good stock based on historical performance. Now, historical performance is something in nature that has already occurred, so we can consider it to be fact, right? Instead of speculating on the future and somehow Procter & Gamble is going to lose its moat and they're going to just, you know, be consumed by the almighty Amazon. I just don't buy that at all right? So I'm perfectly comfortable with owning it myself. Certainly, if somebody has a problem with this pick, I'd love to hear, you know, how Procter & Gamble over the last 100 years is all of a sudden going to go away. All right, a short trade in this account that I've got here is Tractor Supply, and if you followed Tractor Supply, what's tended to happen over the last couple quarters is it's gone down about 75% in value. Now, I didn't own the name up in the high 90s, all right? It's actually adjusted back into the low 50s, and I actually consider that one of my best buy picks right now because it's adjusted back so much. I put Tractor Supply in that heavy buy side, and I put Marathon Oil in that heavy buy side because the momentum is starting to shake out of it, and it's going to start to turn to the positive here pretty quick, all right? So Tractor Supply is a short-term trade. If it ends up going down anymore, I'll just get long the stock and hold it because the Tractor Supply is a phenomenal company, all right? You can kind of see the method to my madness, all right? And then Union Pacific has an industrial name over here. I've got Union Pacific to add a rail exposure over here, and then a United Technologies over here. So those two balance out. Again, you get your 10% allocation, and everybody's happy, and we can go on with our life, all right? And then Verizon as my #1 telecom sector, and then everybody's favorite stock pick. Everybody loves Walmart. Everybody's buying Walmart and they're not buying Amazon, right? No, so anyway, that's just my holding for my wife based on risk tolerance, because I'm not going to put my wife in Amazon and have it hiccup here and take a 25% downturn for her. Walmart's going to continue to be valid with 11 stores domestically. It is the largest retailer in the world, okay? It's a name that I don't mind owning for my wife as a long-term investment, all right? And then we drop down here to the index funds in her account, okay? So together, those form a really, really good foundational piece. Now, does this mean that I'm day trading this account? No, it doesn't, guys. I've got other things to do, all right? I don't sit there and make YouTube videos all day, and I'm not going to. I don't care. If this channel ends up picking up success, and I start making some income on this channel, guys, keep in mind that's not the sole purpose as to why I'm doing this. All right, I am doing this for you guys, all right? And I'm trying to give you a sincere opinion about how just me personally approaches the market, guys, and it works. Quite frankly, it works, all right? And I just added a couple other pieces over here. This is outside of these are both self-managed Roth IRAs, all right? So I manage both of these, and you can kind of see here by the nature of the picks I have, it doesn't require a whole lot of maintenance at all. I put those pieces in and I let them run. You know, I'll retool. I look at these accounts every day just because it's my favorite subject, and I love looking at it. But for the most part, I'm actually just monitoring these two accounts going forward and making sure that I'm taking advantage of every opportunity that I can within these accounts. But the last one here, this is jointly held in a brokerage account, all right? So I do believe that 5% of your portfolio should be put into a little bit more of an aggressive posture to give yourself some exposure to some of those more aggressive names where the growth potential may be higher, okay? So I do encourage you to do that. And as far as gold and silver goes, certainly if you wanted to go up to 10% of your entire portfolio's value in gold or silver or both, you know, I encourage you to do that. I don't look at gold and silver as an investment, okay? I look at it as a hedge. Gold and silver is something that you just buy and you never sell, okay? So that's just the way I look at that. But just in closing, the last pieces of this brokerage account, these are outside. I still own Tractor Supply and Marathon Oil within these accounts, so the capital appreciation will be tax protected, but I've actually taken short positions in both Marathon Oil and Tractor Supply based on their recent pullbacks, all right? Thinking that it's a pretty good entry point for both of those names. And then finally, on the aggressive side, to basically round out this whole portfolio, I've got LifePath Systems and I've got Sirius Satellite Radio, all right? So that kind of makes up my entire portfolio. Guys, listen, when you're watching advice online from, you know, folks pushing out financial institution, I mean, they may have a lot of practice in the market and they may not, okay? And they may have a lot of information to push out to you guys. Be critical of the information, certainly. Be critical of the information that I put out there. I highly expect a lot of commentary based on my picks, and if you've got a better idea of how you could potentially structure your portfolio, I encourage you to offer those comments down below so I can take a look at them, guys. I really enjoy reading through that commentary and kind of getting an idea of how those ideas are bounced off you. But I can tell you, rest assured, that the idea that both of these accounts rest solely in a self-managed account is an extremely new idea, guys. Nobody's talking about it. I'm the only one online talking about it, and I'm going to continue to talk about it because it's the right way to go. It is the right way to go for wealth preservation through elimination of fees and tax protection going forward, guys. Listen, thank you so much for tuning in to His and Her Portfolio. I really appreciate it. Hit the subscribe button so you're notified of any future videos. Hit the thumbs up button, guys, and leave your commentary at the bottom, guys. Listen, thank you so much, and good luck in your investment future.